Hello everyone, welcome to the third part of Basics of Stock Market series, where today in this video we are discussing about types of analysis and types of trading. So let us start with types of analysis first. So there are two types of analysis. One is your fundamental analysis, second is your technical analysis. Fundamental analysis will be easy for those who have a commerce background, like they will understand more about the history, statistics, yearly revenues, profits, earnings, and a lot of other things that are included in micro and macroeconomics. But what others with non-commerce can use is the technical analysis for determining the stock prices. It all depends on knowing how to read different candlesticks, patterns, and analyzing the history of charts. Reading the patterns, understanding it, analyzing the uptrend and downtrend, all this come under technical analysis. And this might sound really tough, but trust me, it's really easy once you get a hang of it. We will not discuss in detail how both the analysis work in this video, maybe a separate video for them for some other time, but let's move on to type of trading now. The first one we have is a day trader. A day trader is a type of trader who executes a relatively large volume of short and long trades to capitalize on intraday market price action. So emphasize the word large volume, okay? Because in a day trading, small volumes don't make much profit. So anyways, in this type of trading, you must buy and sell stock on the same day during the market hours, that is between 9:15 a.m. to 3:30 p.m. So whatever this buying and selling is, it must be between 9:15 a.m. to 3:30 p.m., which is called the market hours. So if you are planning to do intraday trading and you are a beginner, then please don't, because intraday trading is for those who buy and sell stocks in huge volumes. The people who do intraday trading, they buy, sell shares in lakhs and even crores of volumes. Even if you try intraday trading, you won't be able to make much profit on a single day. Plus, whatever you are making, whatever small amount you will make in intraday, you will lose more over the brokerage fees. The brokerage fees will be more than what the actual intraday trading profit you will gain. So basically you are facing loss if you are investing really small amount. So if you are a beginner and you just have like 500 or 1000 rupees, you should not try intraday trading. But if you are beginner but you have a large amount, you can maybe try once, but it's not a good suggesting trading for beginners. Anyways, next is momentum trader. The momentum traders use a strategy in which they buy securities, stocks that are rising, and sell them when they look to have peaked. Unlike intraday trading, where you have to buy and sell it on a single day, here you need not have to sell it before 3:30 p.m. You can keep it as long as you want. But their main goal is to find buying opportunities in short-term uptrends and then sell when the securities start to lose momentum. So when I say long-term, I mean for 2-3 weeks or maybe 2-3 months, depending on when the stock price hits the upper circuit. People who have the basic knowledge about technical analysis can start a momentum trading. Even if you don't have any technical knowledge, you can still start with this type. At least it's better and much safer than intraday trading. So moving on to the next trade type, that is swing trader. Now this is the light version of momentum trading. It is similar to momentum trading, but there are some differences. Let us understand it with a difference table. So here is the difference table that I was talking about. If you pause your screen, you can check it out, everything, the list. So I hope you understand with this table and all. So momentum traders execute fewer positions but hold them for longer time. Swing traders execute more positions but hold them for shorter time frames, and all these other points. So this is all you need to know about swing trading and momentum trading. So moving on to the next one we have is long-term investors or traders. It refers to the trading style in which the trader will hold on to a position for an extended period of time. A position trade can last anywhere from a few weeks to a couple of years. Now this is the actual big game of the stock market. This will test your patience level, your emotions, and your discipline. A long-term trading easily is about 4 to 6 months and as long as a year or two. In long-term investing, we are not expecting quick money. It's all about patience and discipline. Now, when I say discipline, what do I mean? Let us understand it with a live chart example. If you see this chart, this is a chart of Reliance Industries. One is one-day chart, another is a 5-year chart. So as you can see, in that one-day chart, the stock went down. So if you would have invested here, you would have obviously suffered a loss. But now, look at the 5 years graph of Reliance. You can see that the graph is going up, right? Even if there are some drops in between, the stocks have gone up, right, from 400 back in 2016 to 2200 at the current time. This is what a value investing stock looks like. So if you are planning for a long-term investing, and in fact, you should plan for a long-term investing, this is the simplest way to determine a growth stock. And that is why I say you need to be disciplined and have patience to hold for such a long time. 4 or 5 years aren't like a short period of time. You need patience to hold this much time. So here is another example of DHFL home loans. Here the case is exactly opposite. The share price has come down. This is a bad example for a long-term investing. So 5 years ago, if you would have invested rupees 100 in DHFL, its price would have become 0 as of now. as DHFL has been delisted from stock market due to its poor performance and large debts. So you couldn't have predicted it by just looking at the graph, right? And hence reading news is also important. Keep updating yourself of all the companies that you have invested in. This is how you can know when to buy, when to hold, and when to sell. So that was it, types of analysis and types of trading in the stock market. I hope this was resourceful and I hope you have learned something from it. So for part 4, you can click right here on the right side of your screen. In part 4, we will be discussing about how to open a trading account in Grow app, which is very important. We will also discuss what is the broker and what is its job. So if you like this video, hit the like button, share with others, and comment down if you have any questions, or you can DM me on my Instagram anytime. And last but not the least, a sub to the channel would be great. Bye bye.